Hello, ladies and gentlemen. My name is Greg Mikulowski from ForexLive.com. We just saw the U.S. employment statistics. They were probably a little bit higher than expectations. As a result, we're seeing the dollar move higher. We're seeing stocks move lower, and we're seeing bond yields also ticking to the upside. Non-farm payroll came in at 263,000 versus 250,000 expected. The private payrolls was up 288,000. Manufacturing payrolls rose 22,000. We saw the unemployment rate dip to 3.5% from 3.7%. We saw the average hourly earnings come in as expected at 0.3%. And we saw the average work week remain steady at 34.5 hours. The labor force participation rate did dip down, which helped to lead to the unemployment rate decline. That dipped down to 62.3 from 62.4 last month. So we've seen the U.S. dollar move higher in response. We've seen stocks move lower. The Dow Industrial Average is currently down 260 points. The S&P index is down around 40 points. And the NASDAQ index, we're going to have to wait on that, but that's down also. We're seeing U.S. yields. NASDAQ is down around 178 points currently. U.S. yields are higher with the 2-year up 7 basis points. The 10-year yield is up 6.6 basis points, and the 30-year is up 4.3 basis points. So we're seeing higher U.S. interest rates. We're seeing lower stocks. We're seeing a higher dollar as well. So let's take a look at some of the technicals that are being driven by the report. We'll start off with the euro versus U.S. dollar. In the pre-market report, I said getting below the 200-hour moving average and the 50% retracement here would be a tilt more to the downside. We also needed to get below this swing area right here and the underside of the broken trend line down at the 0.9733 level. Those are our targets on the downside to get to and through if the to increase the seller's bias. But right now, with the price below the 200-hour moving average, that bias is now tilted more to the downside. Stay below that 200-hour moving average and trading today at 0.9787, and the sellers remain in control. We're below the 200, we're below the 100, we're below the 200. We're also now below the 50% retracement as well. That's also a barometer for bullish above and bearish below. So the bias remains to the downside for the euro versus US dollar. On the downside, our next real major target comes against the underside of this broken trend line and also the low area of this, the low of this swing area. Swing low, swing low, swing high, swing high, swing high, swing low, swing low. You can see how this area dissects the bearish area over here and the bullish area up here. So getting below that level would increase the bearish bias for the euro versus US dollar. Let's take a look at the dollar versus yen. And this currency pair, well, it looks like went down and tested the 100 and 200-hour moving average at some point during the report. I don't know when, but maybe right before. And the price moved up and now is above the 145 level, currently trading at 145.22. Here we know that the Bank of Japan had verbal intervention right here. We also know that it had actual intervention right here, which sent the price down 500 pips in a matter of hours. Then we rebounded all the way to the upside on the fundamentals here. This week, the price did go down and test the 38.2% retracement, or at least sniff that level before rotating back to the upside over the last few days. We've traded above the 100 and 200-hour moving average, which is more bullish as the fundamentals support the U.S. dollar versus the Japanese yen. Will the Bank of Japan be satisfied, or will they come back in and intervene or put a lid on the pair? We will see. On the top side, we need to get above the 145.30 level from a technical perspective to increase the bullish bias. That was the high price that we saw Monday's trade. So get above that level would be more bullish. Let's take a look at the sterling versus US dollar. And on the downside, I earmarked the 38.2% retracement of the 2-month range of my pre-employment report. That level comes in at 1.10944. We're currently trading at 1.1119. About 30 or a little less than 30 pips away from that level. I also had a level on the hourly chart, which we were interested in, and that was the 200-hour moving average. That comes in at 1.1114, and as you can see, we're trading just above that level. The low price for the day came in at 1.11172, just above that 200-hour moving average. Get below that level, get below the 38.2% retracement at 1.10944, and it opens up the door for further selling in the pound versus US dollar with the 38.2% off the hourly chart next at 1.10589 as the next target. So right now we're finding support against a 200-hour moving average. Got to get below that level to increase the bearish bias from a technical perspective. Right now, we're seeing the dip buyers lean against that level because risk can be defined and limited, but the bounce has been somewhat modest for the sterling versus US dollar. So be aware and be prepared in that currency pair. Dollar versus Swiss is heading to the upside and looking to test the high price for the week. That high price came in around the 50 level, and that's about where we've traded up to in trading here today. Get above that level when we start to target the double highs that we saw in last week's trade near the 0.99647. Move above that level, and we go to the daily chart, and we're trading at the highest level going back to June 16th, and have traders looking toward the parity level and as the next key target, and the high prices that we saw in the month of May and June came in around the parity 50 to 61 level. Those would be other targets on the top side. So, but right now we're seeing resistance sellers against the high prices in the off of the September highs near the 0.9965 level in the dollar versus Swiss. The dollar versus Canada, their employment data pretty much came in as expected, so the focus is on the US dollars. Move to the upside here, and what you can see in trading here so far in this currency pair is that the price moved up to test the high price that we saw in the early European session near the 0.37613 level. Get above that level and opens up the door for this swing area up here between the 1.3807 to 1.3836 level. That was high swing highs that we saw in the month of September here for the dollar versus Canada. And I guess that this might have been the 1st of October as well. No, it's September 30th. So September 30th high, the September 28th high, and the September 26th high. In other currency pairs, quickly, we're seeing the Aussie versus US dollar move to the downside and looking to test our low price for the year. And the September 27th low at 0.6363. For the New Zealand versus US dollar, it is also moving down toward our low prices for the year as well, and below this swing area between the 0.5620 and 0.5627 level. So there you have it. A look at the employment statistics, also a look at some of the technicals that are driving the market. The dollar is higher, stocks are lower, yields are higher. The Dow Jones is now down 324 points as it gets worse and worse in that area, and the Nasdaq index is now down 226 points. So things are getting worse in the U.S. stock market as yields move higher, as the Fed is nowhere near cutting or at least stalling their rate rises for the time being. So my name is Greg Wenkolowski. Good fortune with your trading. Bye-bye now.